Welcome to this edition of Beat the Street. It's Wednesday, the 27th of December. Let's take a look at the headlines as we wait the start of today's Wall Street session in 1 hour's time. We'll be taking a look at what's happening with US indices. We've seen one of the lightest days yesterday on record, or a recent record at least. Despite the fact it was a positive session yesterday, and that's subsequently given a boost to what happened overnight in the Asia-Pacific markets and subsequently as well to Europe, which is higher. But the thing is, can the baton be handed over again to the US indices and hopefully get something slightly stronger? At the moment, looking as though we're going to be opening where we left off yesterday's session. In among some of the corporate news headlines, we've got an appeal by Apple. It's going up against the International Trade Commission decision to ban US sales of Apple's two most recent watches, because it comes up against patent infringement, according to those that are looking at this from a point of view of litigation. And we're watching oil as we see a continuation of the geopolitics around the Red Sea, and this is sending oil up a further leg higher. We've got 4-week highs now for both Brent and WTI. So, good afternoon and welcome to this special edition of Beat the Street. I say special, it's because we're looking at markets in what is essentially a very difficult time because we've got very low volumes. Let's take a look at this chart we've just seen a flash print of for the Dow Jones Industrial Average. And amongst the news headlines we've seen over the last week or so is a new print higher intraday at 37,645. Now you can quite clearly see yesterday's move up in the markets that we saw, and we're holding on to that with a little doji style candle awaiting the start of today's session. It really was a day of light volumes in yesterday's trade, and this is seen across Europe as well as anything else. But nonetheless, we've seen a new strike higher for the S&P 500 as of the intraday trade highest yesterday we've seen since the beginning of January 2022. So we're very close to 24-month highs on this market. 48.18 is the high that we saw. For those that tuned into the mid-morning, early morning call this morning at 9 o'clock, which is what we're running at the moment this week, I was talking about the Oppenheimer price target at the back end of the year, 4,900. We're still some distance away from that, 130 odd points, 230 odd points, I should say. But this 48.18, I think, is now very much in view. We break that, we're then on to new record territory. And the NASDAQ just bubbling around the highs. In fact, if we close at these levels, it will be a new all-time record high for the NASDAQ. 24-hour markets punching higher, but not quite as high as we saw intraday yesterday. We saw a new record high for this index at 16,910. So things looking positive, especially for some of those tech stocks. But after one of the recent, the quietest days in recent history, Wall Street gets another start, and they hopes that things might pick up because we've seen some trade across on this side of the Atlantic to give a little bit of a slingshot to those US markets. I caught up earlier today with Tom Sosnoff from Tasty Live, and I began by asking him about the difficulties because of live volumes.
Well, it's kind of crazy yesterday. I mean, we've been very busy. The derivatives markets have been, Tasty's almost, I would say, 97% derivatives. So the options market, the futures markets have been really busy. And all of a sudden yesterday, I mean, maybe it's because Europe was closed. Maybe it was just because a hangover from Christmas here on Monday. But OCC volume was under 30 million contracts. We hit almost 70 million contracts just a couple of weeks ago. And futures volume was the lightest I'd seen. I think the S&Ps yesterday only traded, I want to say 600,000 cards, which is about half of the normal daily volume. That was like a holiday day yesterday. So I don't read much into it. I mean, we're at record highs. It's funny here. Everybody is, riding this wave, and there's a little bit of piling on going right now. There's a little bit of desperation in people trying to play catch up. But this market, every single one of our indices is at record highs. And so I kind of feel like there's a lot of risk right now. And getting ready for 2024, we're leaning, on the broad market, I can speak my own position. I'm leaning a little bit short here and kind of thinking that the NASDAQ might pull back a little bit. At least if I'm going to buy anything, I want to do it from lower prices.
Yeah, just bring up a chart of the Nasdaq just to put this into some sort of context. We are brushing up against those record highs that we had when we look back on the market that we've got now record highs on from those highs we had back 24 months ago.
Yeah.
So light volumes quite often actually does promote sort of upside. S&P 500, not quite at the record high that we saw back in January 2022. What I want to do, Tom, is very quickly talk about what's happening with dollar. I've got this trade set up here. I look at this from a technical point of view. A lot of IG clients trade the technicals. My technical setup here, as you can see on the picture, is that we've got this little inverted pennant pattern. I've drawn a target price down to 162. I've been taking clients short with me down to this level here. I've still got that price target in place. Does this play out for you from a fundamental play, short dollar?
I think that most of us, and when I speak for most of us, I'm just kind of thinking like, kind of the traders I talk to every day. And I kind of think that most of us are leaning short the dollar right now. Like I happen to be long the pound. I happen to be long the yen is our biggest position right now of all the currencies. And so we are definitely leaning short dollar, kind of long a basket of currencies. I'm right there with you.
Yeah, promoted by what? Fed rate outlook? All the interest rate cards are looking like they're going to be lower next year. We've got something like a roundabout possibility of 75 basis points to 100 basis points down on UK rates. And it seems like there's a similar sort of play. It's interesting, isn't it, where you've got a weak dollar, where you've got all the interest rate pictures coming down. Do you see any particular play for the dollar in this market where we've got lower interest rates across the board?
I think it's a little dangerous to look at. I think the interest rates right now have already priced in all these rate cuts, and they probably overpriced it. Meaning the bonds, U.S. debt markets, especially the 30-year and the 10-year, have gotten ahead of themselves, and so they've priced in probably more than 100 basis points. And so I think the bond market's just we got down to about 107. We're trading 124.5 right now. So we've rallied 17 handles. That's a massive move in the 30-year bond for US, debt markets. I think it got a little bit ahead of itself. I'm not bullish on the currencies, and bearish on the dollar because of bonds. I just think that they've underperformed, for so long right now. And the dollar's been so strong for so long. I think the dollar's just a rich play. And I think the bonds at this level, I actually don't like them either. I think they're a little bit high. I think they've priced in. They're probably priced to perfection. So I don't love the bonds here, but I definitely don't love the U.S. dollar either.
Tom Sosnoff talking to me earlier on. Let's just quickly bring up a couple of charts. He referred to long sterling. It's an interesting trade, actually, long sterling. Currently trading at 127.52. We've got a headwind just above where we are at the 128 level, which was the high print that we saw a couple of weeks ago when we saw that market up there at the highs of 127.94, but I think it's a 128 play for your price target. First of all, if you're long on this, your stop goes underneath the underside of this rising line of support. So you're stopping around about the 126.50 level. 127.52, 127.94 is the level to break. Got to break at that. We're then on the way up to the 129 level, and then ultimately the 130, which is the highs that we saw back on the 27th of July. But it's not just long long sterling against the dollar, which he was talking about. This is a trade I really like the look of now. We've got some really nice strong candles above this previous line of resistance at 110.17 for euro dollar, which are the highs that we saw back on the 29th of November. I quite like the look of this. And if, as what Tom was saying and what we're looking at in terms of some of the technicals, that we remain long dollars, this is a really good play. Quite a steep trajectory. But in terms of where we are, we're at the highest print we've seen now here for the euro against the US dollar since the 27th of July. And it certainly looks like this has got legs to go higher still. If you're long on this, your stop goes underneath this area down here at around about the 110, just below the 110 level, 109.90, perhaps maybe a good place for your stop loss. Keep bringing the stop loss up if you see a continuation of this trade, this long trade. Currently trading at 110.66. So we'll be following up on this on the mid-morning call tomorrow morning. At 9 o'clock. Hope you can join me there for that. Let me just keep on the charts. Just wanted to update you as well on what's happening in terms of volatility. Tom was talking about really light volumes, and I was talking there about the temptation is for some traders to continue on the trend. I was talking about the higher highs in light volumes, it's easy to take this market in the direction you want to take it. And of course, if you've got a light volume day on the day way down, it's a little bit of a different sort of dynamic. But on the way up, what this does is this means that volatility is on the way down. Volatility now down at 1487. We've really got any sort of volatility in this market at all. And that's really what Tom was talking about. That being said, there are some individual stock stories I think that could well attract investors at the start, or traders at the start of today's US session. Apple is one of them. It's filed an appeal against the International Trade Commission's decision to ban US sales of Apple's Watch Series 9 and Watch Ultra 2 models. Let's take a look at what we got in terms of the trade on Apple at the moment. We are on the way down. We've seen the start of today's session on the IG platform where we got some early trades, currently testing the 193 level. The models which Apple says are their most popular were banned after the ITC found that Apple infringed patents held by health tech firm Masimo on blood oxygen saturation technology. Apple's also requesting an emergency stay on the ban for at least 2 weeks until a decision is made on redesigned versions of the banned models. So it seems like Apple accept there's a bit of an issue here, and they're wanting to do some tweaks to take it away from the patent infringement. Apple's legal team is claiming it will suffer irreparable harm if all models remain off the shelves during legal proceedings. Now, looking at this chart, on the way down at the moment, looking for a slightly weaker start for the start of Apple's trade today. I want to show you this blue box here, which is from the very first trade in 2023. We gained 60.72%. We hear a lot about the fact that Apple, because it's so large, has been twisting the markets along with Amazon, with Microsoft, Nvidia, and so forth. Some of these big plays we've seen up this year have really pulled the rest of the market with it. And you can see when you're talking about a $3+ trillion company, when you get this sort of improvement in the share price, it is a massive move in terms of money going into the stock. That being said, look at what we've got here. This is played out really nicely. This is an inverted wedge. A bullish wedge pattern which has been developing, and that played out beautifully with a slingshot up to those new record highs. And I think potentially, like Tom was saying, possibility that we've got an opportunity here, like a lot of these markets, to take this market lower. 192.98. If you are short on the Apple trade, your stop goes around about the 195 level if you're short on Apple going into the start of today's session. Let's stay on the charts. Because there's another interesting chart that's developing here, and that is for Tesla Motors. According to Bloomberg News yesterday, Tesla is preparing to launch a revamped version of its Model Y from its Shanghai plant. The move was first reported by Reuters last March. At the time, sources say Tesla was expected to start a new Model Y production in 2024. Is this a new opportunity to start a new pricing? Possibly, because a lot of pricing pressures have been brought to bear on some of the existing models. But it's an interesting bearish wedge pattern developing here. Now, the bearish wedge, it faces upwards. It needs 3 touches on the resistance line, which it's got. It needs at least 3 touches as well on the upward support line, which it's now got. And I would draw a little connecting line just around about here. Let me just go into that to get some more, if I can find it. There we are. So there's my line I want to copy. Bearing in mind this is bearish, it will be on the way down. Now, I'm not suggesting we're going to get a break of that in the next day or two, but a break of this line of support would give us a completion of the bearish wedge pattern. Bearish wedges face upwards, take the height of what was the point at which it hit both sides and project that down. So I think this area down here is likely to be the line of support. If we get a candle close below the underside of this rising line of support that we got on Tesla, that would be the next line to watch out for, 20.0518. That sort of area down here when we saw those lows back on the 10th of November. Have to see how things develop. But at the moment, at least, Bloomberg News yesterday reporting that we're going to get a new version of its Model Y from its Shanghai plant sometime in early 2024. In amongst some of the other stocks we're watching, just a quick update as well on this stock. This is another one I think that could well be worth watching at the start of today's trade. Now, this is Bristol Myers Squibb. Let me just quickly dial in Bristol Myers Squibb, the DFB. The stock is not all sessions on the IG platform, but we might see a little bit further downside for Bristol Myers. It said late yesterday it would buy Rayzebio for about $4.1 billion to bolster its cancer drug business, marking the second multi-billion-dollar deal struck by the drug maker in less than a week. Bristol Myers had announced a $14 billion buyout of schizophrenia drug developer Karuna Therapeutics last Friday, nearly 2 months after a newly appointed chief executive, Chris Berner, officially took the helm at the company. Recent deals show Bristol's urgency to bring more products on. According to William Blair, analyst at Matt Phipps, some of the drug makers' older therapies are set to face loss of patent protection later on this deal. Now, where does this stock go from here? Well, we've recently seen new recent lows for the stock of Bristol Myers. Now, Bristol Myers is in this sector, which is quite often seen as a defensive sector play. You can see a break of that low that we had there. The next line of support is down here at 46.35. Deals like this quite often see a little bit of a downside in trade. So if we do get downside from 51.44, your stop would go above this area up here. Let me just move that up to that point up there, 53.46. So I'd put my stop loss above this if you're short on this. But with the Racebio deal, Bristol gains late-stage targeted radiopharma therapy that acts, according to the company, like a cannonball to kill cancer cells by delivering fast radioactive particles to the tumorous tissue or tumor-associated cells. Bristol also gains access to Racebio's manufacturing site in Indianapolis, in Indiana. So there's a lot of reasons, I think, possibly that this could well ultimately be a positive deal. But I just think that sometimes when you get this sort of deal, sometimes you get a little bit of a downdraft in shares as a result. Now, I just want to catch up on a stock that in fact did move in yesterday's session on the New York Stock Exchange, but it's certainly one we've been following here in Europe. And because we've had a 4-day holiday for Europe, people have only just sort of thought about it in terms of the overall deal last weekend, the weekend just passed. The British billionaire Jim Ratcliffe struck a long-awaited deal to buy what was in the end turned out to be a 25% stake in Manchester United. Ratcliffe's stake purchased at $33 per share, values Man U at $6.3 billion. Now, this includes the massive debt pile that's been racked up by the current owners, the Glazer brothers. Ratcliffe has pledged to invest $300 million in the club to try and revive its fortunes, $200 million of which will be paid on the closing of the deal, whenever that is, and a further $100 million by the end of 2024. I want to show you the share price chart, because yesterday we got this stock lifting up above what had been this line of resistance. I got drawn on here from the highs that we had back in September and early October at 2052. The stock closed at 2053, but it had actually peaked above the 200-day moving average for the first time we've seen since the 1st of September. So that's an interesting trade that we saw yesterday. As I said, it was in the market yesterday. But I think one of the other things we're going to get out of this is that the Ineos Group, which is owned by Jim Ratcliffe, will take over management of the club's operations. This ends more than a year of uncertainty from the ownership of the Glazer family. They said in November 22 they were looking at strategic options. But in the statement, Jim Ratcliffe said, "As a local boy and a lifelong supporter of the club, I'm very pleased that we have been able to agree a deal with Manchester United board that delegates us management responsibility of the football operations of the club." So to some degree, football coming home to a point where local boy made good. Jim Ratcliffe has now got a 25% stake in the business. I was talking to one of our social media guys with us here at IG who is very much into sport, and he was saying basically this means that ultimately Jim Ratcliffe will take over the club at some point. It's just a question of when, it's a question of how, and it's a question of whether or not the board is willing to accept bigger ownership by Jim Ratcliffe. But at the moment, at least, certainly seems like Man U in a good place, and they won as well against Aston Villa yesterday. So that all looks pretty good for the club. But that's the deal we got hammered out of the weekend, which, as I said, a lot of people coming back to the market only just really heard of in terms of what we saw in terms of the move yesterday for Man U stock. Now, let's take a look as well at what's happening in oil prices, because there is something here which is affected by what's happening with the US. This is US crude. We're coming up against this line of resistance at 75.16. Investors are monitoring the Red Sea developments, where some major shippers are resuming passage through the area despite the continued attacks by Yemen's Iran-backed Houthi militia. API and EIA weekly inventories are expected tonight and tomorrow, respectively, a day later than normal for both reports due to the Christmas holidays. Also yesterday, the US government finalized contracts to purchase 3 million barrels of oil to help replenish the Strategic Petroleum Reserves, the SPR. The US has now purchased around 14 million barrels of oil. The Energy Department has already secured the cancellation of 140 million barrels in congressionally mandated sales from the SPR, scheduled from late this year through to late 2026. So some interesting moves going on with the US government and their petroleum reserves. But at the moment, at least, we're up against a resistance at 75.16. If you're long on this, your price target will be the 76.86, which is the 76.4% retracement of this move that we got here for oil. That's it. I will be back at 4 o'clock this afternoon UK time with a look ahead to what's happening on Thursday, and then tomorrow morning at 9 o'clock where we bring together the early morning call and charting the markets in one webinar at 9 o'clock on the IG platform. Hope you can join me there for that as well. Have a good evening.